Crypto. All the crypto news in one place.
Expectation. So what's in store for 2026? I think this is a great place to start because it really characterizes a couple very big things here. And that is this right here. Retail's mood, extraordinarily negative. How do we know? Because we've been highlighting this every single day, at least I have, that we've been streaming over the last months and years. And what we're seeing is that when we're in these low levels of confidence, AKA fear or greed, dark red is fear, dark green is greed. These have been incredible opportunities when everybody's scared running the other direction for pretty not only bounces, but very strong bounces into a continuation higher, strong bounce into a continuation higher. In fact, this marked the bottom, but after a
latest cryptocurrency news, what is happening, and specifically this article right here. Now, we're not going to spend too much time on it today, but this is very important. Yeah, I get it. Right? Cryptocurrency prices have been down. They've been in the red. We've been in fearful territory for the majority of 2025 with a lot of assets hitting fresh lows. Now, does that stop the institutions from buying? No, absolutely not. Does it stop the institutions from creating the framework for industrial growth? Absolutely not. Guys, one bad year, a couple of bad months does not mean that the gains are over. It does not mean that the industry is done. If we take a look at
Prenetics Global, this is a company backed by legendary footballer David Beckham. They're abandoning their Bitcoin purchase plan. So this is what it says. 6 months after a Bitcoin sell-off, after making a splash by saying it was the first healthcare company to establish a Bitcoin treasury company, Prenetics has abandoned the strategy. Prenetics has ditched its Bitcoin buying strategy just 6 months after announcing a long-term commitment.
Yes. Of course, the guy, Scott Melker, look at this smirk and smile. What this guy is saying, it makes him happy. Scott Melker will say and do anything negatively about the XRP space, but he will go around and post XRP news on his channel because he is, in fact, a Muppet. You know, look at the cartoon. He's a cartoon. Everything that he does is negative about XRP, and then he goes and tries to post XRP content for clicks and views on his channel.
And to me, I think they're great ways to play not only stablecoin adoption, but RWA proliferation in the next few years.
So how do you...
Sorry, people I don't take very seriously, I call them Muppets, right?
During the Biden administration, President Biden vetoed a bill which would have allowed banks to custody Bitcoin and other cryptocurrencies. Once President Trump came in and ended the war on crypto, the SEC officially rescinded the SAB 121, allowing banks to custody Bitcoin and cryptocurrencies. This was huge because this was quite recent. About a month and a half ago, JP Morgan started allowing Bitcoin and Ethereum collateralized loans. Most of you won't understand how important and how crazy this is. But first of all, JP Morgan is the largest bank in America and in the world in terms of market cap value traded on the stock market. They have some of the wealthiest clients, and Jamie Dimon, the CEO of JP Morgan, was one of the biggest Bitcoin bears in history. He called Bitcoin a fraud, and that in 10 years time from now, it's going to be closed down. He also mentioned that it's a Ponzi scheme and that any JP Morgan employee that decides to transact with it is going to be, or offer it, is going to be fired.
I think there will be some tailwinds in terms of, what's happening in DC not too far from here. I know we're all still waiting for, some of the legislation to move through the system. I think that it doesn't impact us immediately and directly, but I think it helps support the broader crypto economy. I think all of those things kind of, it's a rising tide, it lifts all boats, so to speak. And so I think there's some progress that we'll see there. I really think one of the big components, or maybe two of the big components, is more adoption. Every day you see another big bank come in saying we're willing to lend against it, we're willing to custody it. I saw a little chart on X recently listing all the big banks and whether they're involved in custody and exchange. If you look at that table, you see more names on there with the yeses than you did a year ago. I think 2026 will be if we look at that a year from now, I guarantee you there'll be, if not hopefully all of them, definitely the majority of those big banks will be somehow involved in the ecosystem. I think that will create more adoption. And for us, more from a company perspective, we're just going to continue looking for areas of capital that are where there's pent up demand. I mentioned Michael is just out in the Middle East. I feel very optimistic about that.
Also great for just some exposure as well. And we have here Telcoin CEO Telcoin Paul explains why telecoms are uniquely positioned to be Telcoin network validators, highlighting the parallel efforts of the company and the association. And by the way, this got 48,000 views. So again, like I said, it's a small time platform, but the exposure is definitely there. Check it out.
How does the Tel coin fit into this model for you guys? What was the decision in deciding to launch that, and where do you see that fitting into this overall kind of banking system you're setting up?
The digital asset bank is actually issuing an EUSD, so that's a stable coin, one-to-one backed by US dollars. The original concept of the company was more focused on the telecommunications industry being the most distributed industry in the world. There's 2 or 3 in every country, all with massive data centers very close to your handset. Arguably, if KYC'd or no 7 billion customers already to some extent. So I think that was the original alignment for the company. I think what we evolved into is that split off into the Telco Association, which has a Tel token. Very excited to have a whole bunch of all the major telcos that have, from the telecom industry's perspective, 2 things that we focused on. One, why would you want to validate a chain where you're in competition with everybody else? I think that telcos want to have a validated chain.
I didn't sell Bitcoin, obviously. I didn't sell Ethereum. I didn't sell Solana. I actually didn't sell BNB. I didn't sell Aster. Because when I look at all these cryptos that I just named, I see a lot of them as having an edge. For example, Ethereum has a traditionality edge. It's a traditional altcoin that is established well within institutional interest that is already getting investment and inflows from institutions. That gives it an edge. Solana has one of the best edges in terms of economy and ecosystem that I've ever seen before. There is not an ecosystem that thrives as much as the Solana ecosystem does still to this day after everything it's been through. Think about everything that happened with Trump and Melania and Libra and all of these tokens. Hold on, give me 1 second. My dog's by ants. Hey, Sol, come here, buddy. Come here. Good job. Sorry. I didn't want him stepping ants. Say hello. Anyway, so where was I? Yeah, with Solana, right? Whenever you look at the Solana ecosystem, it's been through so much terrible stuff, but it still thrives and it still has an active base of traders who are there every single day. That sort of loyalty is hard to beat. Speaking of loyalty, XRP. The XRP community is one of the most loyal, diehard communities of any community in crypto that I've ever seen before. They stuck through it through 2021, 2, 3, and 4 with no benefit. By the end of 2024, though, seeing all the benefit in the world, being finally the crypto that gains attraction.
If you're an institution, why would you pay a management fee to hold an ETF that loses to inflation, when you could just hold the asset itself and get paid up to 4%? It's a massive opportunity cost. And on top of that, we had the Grayscale unlock. Before spot ETFs came along, pretty much the only way institutional and non-crypto native investors could get access to BTC and ETH were via Grayscale's trusts. Once spot ETFs were approved, however, these trusts became largely obsolete, and their fees were way higher than those being offered by ETF issuers. So, just like with Bitcoin, the Grayscale Ethereum Trust, ETH-E, saw massive outflows, over $5 billion. This created constant sell pressure that the new inflows from the likes of BlackRock and Fidelity just couldn't fully absorb in the short term. And to cap it all off, net assets in ETH ETFs dropped from a peak of $30 billion worth in August to around $18 billion worth by year end. And finally, we have suspect number 3, the DAT collapse. Earlier this year, we saw a massive trend of digital asset treasury companies, or DATs. Companies like Bitmine and SharpLink were raising cash to buy ETH, trying to copy the MicroStrategy, since renamed just Strategy, playbook.
Other major factor is the crypto market structure bill is expected to pass in early 2026, and that's a major catalyst that will unlock a lot of liquidity and innovation. So here's the headline: U.S. lawmakers expect to address market structure markup in January. So there's multiple phases to getting this bill passed and eventually, going to Donald Trump for signatures. It has to go through the markup and approvals for discussion and, the government process essentially. But according to reports and people familiar with the matter, the banking committee could hold a markup for the Responsible Financial Innovation Act during the second week of January. The event would mark.
Interestingly, last night, the Fed put $75 billion into banks on the New Year's Eve, making it the biggest liquidity flood since the pandemic, backed by $31 billion in treasuries. This is not QE, not bailout, just proof that the system still needs emergency support to make it through the year.
It's the final year of 2025. What does that mean? It means all eyes on 2026. This year's cooked. Bitcoin heads into 2026 with a clear macro risk, President Donald Trump's tariffs agenda. And in 2025, crypto traders saw tariff headlines literally every 5 seconds, and they moved prices fast. Even with ETF inflows, it was a crazy crypto market. You guys know, though, how I feel. I'm extremely bullish on this space. I'm a guy that's looking at crypto, stocks, real estate, building businesses, precious metals. I want to look at it all. And I still think when I see crypto, I see...
I don't know. I got that as a buoyant market in 2026. I'll say something that's a little bit cynical, forgive me, but you do have a situation where the president's going to want to win those midterms. So he's going to flood the zone with capital. He's going to drop interest rates. He's going to try to perk up the economy to get people to vote with his team come the midterms. That bodes well for the stock market. I think it bodes well for the altcoin market, and I think it certainly bodes well for crypto, Bitcoin in particular.
Any Bitcoin price prediction with a 1 year outlook? Hey, if we record another interview 1 year from today, what do you think the 2026 high for Bitcoin will be?
Well, I mean, this is my problem. Let me
here with the cough. It's all good. This is the big deal. Coming back over to this, investors are waiting for some of those promised developments to be realized. Well, what are they? One of those is the market structure bill. The banking committee, senators on the banking committee have just landed on Thursday, January 15th, for a highly anticipated markup of the crypto market structure legislation. So there are, although it feels slow and it's never happening, there are meaningful steps being taken to get to this. What is this blabbering again? Hey, it's just talking about markets, talking about what's going on and how we can look into 2026 and feel like we have some idea of what's going on.
For 4 years or 5 years, you should listen to those who were here for a longer time. And I've been here for quite a long time now. All right, so every bull cycle always ends with euphoria, over speculation, and greed times 10. And we didn't see any of that because only Bitcoin got a proper all-time high. You could also argue a few altcoins got their fair share of bull market. You saw BNB and a few other random tokens pump absolutely astronomically, but very few. And if you look at the Bitcoin dominance, which is the biggest indicator in terms of Bitcoin versus altcoins, right? And the Bitcoin dominance has remained very high. And again, from my experience from 3 bull markets, every single bull market has an altcoin season where the Bitcoin dominance
16% total increase over that after a horrifically scary, choppy, agonizing year, and then it dumped, almost immediately, right? It dumped almost immediately. So a lot of people are saying that this was the 4-year cycle still intact. Obviously, it technically qualifies. But I think we can all agree that it felt very different, the Bitcoin 4-year cycle this time. And altcoins were just not even a part of it, right? If you look at total 3, not excluding stablecoins, but just total 3. Do I have it here?
We're looking for, because it's, again, invalid, then that actually makes me think about prior markets. So let's look at some prior markets to compare to. The first market that comes to mind here is the market in 2018. I recall this market very well because in the entire history of Bitcoin, I've been here for the vast majority of it. I got into Bitcoin here. I've watched all of this take place, and I've also watched this movement right here. And what occurred during this time period was extremely telling. Bitcoin continued to reduce volume continually. It dropped volume dramatically, and we even saw the Elliott wave 1, 2, 3, 4, 5 structure, except this time it was intact. We saw the bottom here, high, there, and there. The 5-wave and the 3-wave are with each other, but technically speaking, this would follow the rules. So you'd be expecting an A, B, C correction. Here's the deal. You never saw that C wave, which was right here, formalize. And because it failed, we traded sideways and we eventually fell off a cliff. That's what happened. That's the entire structure of the 2018 bear market. And as Bitcoin continued to reduce and reduce and reduce in volatility here, and as interest in the space waned, eventually something broke and Bitcoin snapped below a critical level of support at $6,000, flushed out and finished the bear market. And it is interesting to me that Bitcoin is starting to look very similar. If we see this quote-unquote C wave that doesn't make any sense because this is not valid Elliott wave, but let's say we were trying to build a C wave here anyway.
So much more on today's update video, so don't forget to once again slap on that like button. Back above 1,000 likes will be highly appreciated, and let me jump straight away in today's update video. So first of all, it is right now once again 2026, like I said earlier, a new year, and the last year 2025 has been a negative yearly close here because the yearly candle open of 2025 was around $93,000 and we closed it around $87,000. So we had a negative year after a big roller coaster basically on Bitcoin, where we first of course dipped below it, then we had a big surge, and of course we went to $126,000 before once again coming down to $80,000 again here. And now the new yearly candle open around $87,000 is obviously going to be once again a very important level, because like you can see from last year as well here, this yearly open candle
$56,000. What the hell, Kelly? I thought you were a bull. I am a bull, but I'm also very aware of possibilities in this market. And in today's stream, I'm going to break down for you where I think the price is going in 2026, what we need to watch out for, some very key signals that are unraveling right now as we speak, but also why I think 2026 is going to be overwhelmingly bullish. Now, again, back to that target that feels so scary, $56,000. I want to show you something really quick. This level, this is the realized price, the average price of every Bitcoin in circulation the last time it moved. So right now, that's at 56,000. Now, why would this be an important number? Well, let's go and look back in time. Every time, not sometime, every time Bitcoin's price has come down to that level, especially below it, this has been an absolutely monumentally generational time to buy Bitcoin. So if we are to get the gift of Bitcoin dropping down to a very known zone, that is a key signal for incredible accumulation and stacking opportunity, which would be about $56,000 as it stands right now, then I would be moving heaven and earth to stack as much as possible. And signals out there that tell us very clearly that we could be seeing Bitcoin go all the way down here to $56,000. What the hell, Kelly? I thought you were a bull. I am a bull, but I'm also very aware of possibilities in this market. And in today's stream, I'm going to break down for you where I think the price is going in 2026, what we need to watch out for, some very key signals that are unraveling right now as we speak, but also why I think 2026 is going to be overwhelmingly bullish. Now, again, back to that target that feels so scary, $56,000. I want to show you something really quick. This level, this is the realized price, the average price.
Basically, what you're seeing are the whales now flipping to the green. Once again, they're loading up. We have seen other charts that measure the buys and sells of like sharks and whales, and they're starting to turn green. So a lot are starting to feel like, hey, you know what? It's time to load up. Here's something else, long-term holder supply. You can see it just flipped into the green. So obviously, some that have been selling, some that, I don't know, maybe fearful or they just want to take profits before the end of the year, maybe for tax harvesting reasons.
The lawsuit, you know what I mean? And he lost that lawsuit to Grayscale. So it's very hard to predict these things timing-wise. But here's what I like going on. Remarkably bearish sentiment going into next year. Up against the backdrop of real rate cuts. So I'm going to stay to my $150,000 price prediction. I'm off by a year, I think, but I don't think I'm going to be off by much more than that. I think we get to 150 next year. Remember, you need a slightly less OG selling, interest rates lower, and the consistency that we are seeing in.
So, did you enjoy the app? Let me know in the comments.